Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then I go off. Yeah, hit the ground.
Hi, and welcome back to The Conscious Day Trader. Today is going to be a big video on bias. Why do we need to analyze bias? Why do we need to know where the price is going next? How can we find easy ways to identify bias so when we turn on the screen, we know what we're looking for, if we're going to be long or short? Make it easy for you guys, a step-by-step guide on how you can create and identify where the price wants to go next. Obviously, we're not God and we don't know exactly where price is going to be going, but we can estimate where is liquidity, where potentially price can go, and that's what's going to influence if we're going to be long for the day or short, and why sometimes we don't need bias to make money. We just might need to be neutral. All this will be answered in this video, so make sure you like, subscribe, and if you want to join our Discord, our free and paid version of the Discord, make sure you write Discord underneath and I'll get you that link so you can join our 600 members and you can join a trading space where it's actually safe to grow as a trader, learn from like-minded people, be more conscious, and let's go. All right, guys, so here we are. We've turned on our trading view. We have our DXY. So what I want you to do first, what we're going to do is kind of create a list. Why do we need a list? Because we're going to use this list on a daily basis. So we want to have access to it really quickly. I'm going to create a new list just so you can see how we do this. And I can use this pink list because there's no assets in there. So we're going to use the pink list and I can change the name on this just by going to these three dots, rename, and I'm going to call this my list. So we have our list, and on here we're going to use our assets. Now if you're trading anything about Forex, if you're trading the euro dollar, the pound dollar, all of them, Japanese yen, anything to do with the US dollar, we're going to need the DXY. So what we're going to do is find the DXY, and I'm going to make this pink for now. So we're going to go and hover that pink, and that's going to jump onto our list. I trade the pound dollar, so we're going to jump onto the pound dollar. And then I'm going to remove it from my red list and put it onto my pink for now. These are the two assets that I need to look at in order to make bias for the day. So what we're going to start is, let's start with the DXY. And that's going to tell us the story of how strong the dollar is. We're going to start on the monthly. And from there, we need to depict what has been the picture of the pound dollar. And very quickly, you can train your eyes to see what has been going since the 80s and the 70s, since the dinosaur here. Price had a huge spike up in the 1984, and it created the highest point that it's ever been to, 164, onto the DXY. You might be saying, why do I need to look at this for my daily bias? It's because we need to know the history of the asset before we can trade it, and that's what you need to. You tune yourself into what price action has been doing for this asset, and we're going to do the same for pound dollar, and that's what's going to make us create a better bias. And you can actually label these highs. So what I like doing is taking a horizontal ray, and we're going to use the command on a Mac to magnetize it to take it to the absolute high. That's going to be 1647.20. That's telling me the absolute high that DXY has ever been to. Historical data. Right, we're going to go down the line and we're going to see what is another significant swing high. The biggest significant swing high after this one is this big one here, 121. What is the next one? The next highest point is quite recent actually. And look at this. If we have to go all the way to 2022, and that is 114.778, and you can round these numbers up to, let's say, 114. If the price was higher, I would round it up to 115, but because the price has gone lower, we can actually coordinate this and round it up to a significant number such as 1140. There we go. We have our big numbers here, and then we're going to do the same on these ones. And when that price is not going to go in any time soon, definitely not for a day trade, so we're going to leave it alone. So we're going to leave that price there. It starts giving us a picture of where the big numbers lie. We can see here we've had multiple highs being tested around these and rejected around this area. This is the first time we broke above this area here. What area is that? Is the 103. So we can take a line here. You can use the closest swing high and you can go to 103. double click on it to change the coordinates. 0, 0, 0. There we go. As we can see, we're getting closer and closer to the price. So a big number here is 103. What is the next number that a swing high has been tested? These lows here have been tested just below 100. So we know that that is a crucial number, that the price has been gone and done its own thing. So we're going to put that in 100.000, and there we go. We have our big numbers. Now we have signposted where DXY is trading. So we've got the 114, the high in 2022. We've got the 103, which the price is very close to, which it was in 2020, and it has been for multiple times in history. So we know that number is significant. What else can you see here? Bringing in the ICT knowledge, we can see that we've just tapped into this fair value gap. So I'm going to start this and putting a fair value gap in there. We don't need to be very picky with this. We just want to understand what price has done and what price is doing. And I use my template like you've seen in my previous videos, where I'm going to put a monthly fair value gap, and there we go. And we know that the price has had a huge push, and then it's come down, found that fair value gap on a monthly level, and then now it's reacting. Now what we also want to see is, what is the Fibonacci telling me about this? You can use the OTE for the ICT Fibonacci, but I do like using the regular OTE because this is not to enter, this is to create bias. So I'm going to change this template to my Fibonacci retracement, and I'll see all the lovely Fibonacci numbers, and voila, where are we hovering? We're in between that golden eye of 0.5 and 0.618. So price can very easily, what can price do here on the DXY? The plan could be two things. One, price can continue to find the OTE level, which is that 0.79, or in Fibonacci terms 0.76, or it cannot do that, and the price is reacting to reaching the golden zone to push higher. These are the two things that can happen. So we know we're in a transition period. People like using these areas for entries. So if it's retraced to 61.8 like it has here, now my bias is going to be long until I've proven wrong that this is going to continue to find the 76.4. And that can be a very simple way for you to identify. This is on a monthly, by the way. This takes time to develop. So you can be discussing and thinking about, I'm going to be long on the DXY, which means I'm going to be selling the pound dollar, okay, until I've been proven wrong, and then I change my bias. So very quickly like that, what we can do is put a line here, a horizontal line, to show us the golden zones. So we have the 0.5 retracement, the 0.618, and we can find a final one on the 0.618. On the 764, and there we go. So we have everything we need on the DXY. We don't need to put so many things up there. We know that fair value gap is being tested. That 50 here had a reaction, came back into that golden zone. We know it's close to a round number, which is the 100, and we're going to fix that because it's saying 86. We want it to say 000. Right there, so we know we've tapped into that, got rejected, and now they're showing signs to pushing higher. That's one story of the dollar index. Okay, so let's recap quickly what we did. One was try to tune up to the asset. What is the historical data on the DXY? We found that it had some round numbers that the price has reacted. We found the closest swing highs or swing lows to where the price has been reacting to. And all we did is throw a big Fibonacci on the latest move that the price on a monthly level has been responding to these levels. We know that it's been hitting those golden zones. So now I'm purposely doing this without the chart open because I want to see if you are tuned up with what we've been discussing. You don't need the chart when you've already done your analysis. That is in there. Bias is all about what is in your mind when you're trading. So if I'm thinking about long or if I'm thinking about short, we did our analysis. Now we're going to tune on to the pound dollar, and we're going to see if that's going to influence what we're going to be doing on the pound dollar for the day. So we created the list, so now we can very easily press space, and that will take us onto the pound dollar. We're going to go back on the monthly, we're going to zoom out, and now we're going to see that big dinosaur in the beginning here in the historical times. This is the very beginning where the pound dollar started the pair. What have we seen since the beginning? And we had that 84 drop like we saw, because the dollar was very strong. That meant that the pound was losing power. But after 84, we've seen a big influx of interest on pushing the pound higher and higher and higher. However, the highest price that it's ever been is 2.64. Now, I like putting these in. I like to know historically what is the biggest number. It is a bit irrelevant for your bias, but I like doing that. And look at that, it's actually a round number of 2.64400 when it started. Now we've got all the swing lows. These are so far away from price that we don't need to put them in. But what we do want to see is where price has been reacted. And the most recent reaction, look at these equal lows here. We had this low here, which was 105, and the 1003, which was the biggest drop in pound dollar history in the recent 2022 in September. So we know that we are at historical lows. So we have to think, what does that mean for the pound dollar? Is this the time where the pound dollar is going to be going down to parity with the dollar? Or is this the extreme of what's happened with the wars and with COVID and with everything else? What is the story of the pound dollar? That's what we need to tune up to. Now, the next closest thing that I can see here that is very relevant, and it kind of shouts out, you can see this 1.4. We can see that number that is getting closer and closer and closer. And if I double click and make that the actual round number, we will see that it has been, and if I extend this, we can see that that price there had a strong reaction. And that is something that we need to be interested in, because if we throw 50% between that line and that line, the price now is trading above that line. So there might be interest to go and retest that 1.4. Now, obviously we're on a monthly level, so we need to think, is that realistic that it's going to happen for our next daily trade? No, but we need to tune up to what the pound dollar is doing. For instance, here we've seen a big drop on the pound dollar, and then we saw a consolidation. And one number that spots out here is the 1.6. So I want to add that number in there because I can see it had a lot of interest and a lot of consolidation when we hovered around that area. So that is another interesting area for algorithms and for price generally to go to. Another big area that can jump out of the screen is the number 2. So we can go up to that and throw the number 2 into our log of data. Now, does it mean that we're going to be looking at these prices? No, but we're actually tuning our eyes to what the pound dollar is doing. So as we can see now, we've got the 2, we've got the 106, which should be a clean chart. So we're going to just double that click and make it 0. So now we've seen the ultimate high, historical high, we've got the ultimate historical low, and now we're hovering around between 1.4 and 1.0. This is the interesting area now on what pound dollar is going to be doing next. So we need to turn down into our favorite friend, which has been the Fibonacci. Why are we going to look at the Fibonacci? Because we're going to look at this drop here. We're going to go closer to the price like we did on the DXY. This move here, price has been reacting to that Fibonacci level. Now you might be asking, why take this Fibonacci and not take another Fibonacci? This is the closest Fibonacci around the area of the move, and we have confirmation that is broken above the 23. And it has retraced all the way to the 61.8. Now the question is price pushing up to that 76.4 like we said on the pound dollar, on the dollar index, which would mean the dollar index is pushing down to that 76.4 as well, and is almost like the reverse picture of what's happening on the dollar index. And that fair value gap here is confirming that area of interest. We filled that, and now it's starting to show interest to push down with a bit of rejection on the bottom there. So we're going to add that, and we're going to put that as a monthly fair value gap. So we're going to add the monthly lines into our retracements, into the 0.5, into the 0.76. So we have the golden zones and we have the 76, which can potentially go. So in the same manner like we did before, price can either do this to the 76.4, or it can start retracing for a lower, which if you believe that the pound dollar is going to be going lower, then that is the area where price can be an opportunity to sell. And that's a big picture on the pound dollar. So here we are again. We're going to do a little summary on the pound dollar to see how tuned up you are with the new asset that we've seen. We did the same on the DXY. Now we know that the pound dollar has ultimate highs on what level? Can you remember? Roughly around 264 or something like that. The closest price down was number 2 when it went double the dollar. Now, what was interesting about that is we've been declining ever since the create, the very low of the 103, so very close to the 1 on parity on the dollar index, and now we're pushing back up into a very interesting level, which was the 1.4. If you can't do that, it means you're not in tune with the price. So we need to go back and do it again and get that feel of feeling in tune with price. The last thing we did, we added on the Fibonacci retracement, and we saw that the price has retraced all the way above the 618 retracement. So we know that that is interesting, that sellers are going to get interested to continue the price lower if we think that pound dollar is going lower. And finally, we're at a level where price can start pushing towards the 76.4 if we think that the pound dollar is going to be going higher. Now we've got all this information. Let's see how we can put it on the charts and see how we can identify bias for today. So we're back on the charts. We've done the DXY. We've done the Fibonacci levels on the pound dollar, and we're going to be trading the pound dollar. So let's go on to a 4-hour chart. Now, when you throw the 4-hour chart, you can see that we're in that fair value gap zone. And this is retracement back to the 61.8 on that price here. We had a fulfillment of that fair value gap, and this is the reaction to this low here. Now, we can see that we haven't taken this low here. And we know what lies below here. We've got ICT liquidity draw, which is sell side liquidity. Now, if your bias was on the long side, wouldn't it make sense to wait, even if you lose an opportunity, for it to take the liquidity draw, which is very close, and it could do something like that, take liquidity draw before it comes back out to retest that 61.8. Now, that's one option of getting a bias for long. Now, if it doesn't give you that and you lose that opportunity, is that okay? Yes, it is. Why? Because it's a less risk trade. You might lose some opportunities with your bias, and that's why sometimes we're going to talk about neutral bias or when it's good. But I believe that in order to get into a long setup, it needs to be a low risk, high profitable trade. So that is an area where it can be of interest. And remember, this is again in that golden zone between the 61.8 and the 0.5 retracement. Now you might ask and say, from what that information that you've told me, I want to be short on the pound dollar. Is that okay? Yes, because we have an understanding of where price is. We know price is that at 102.69, 127. We know that there's interest for it to go back up to the 76.4. So if you want to go short, we're going to wait for the price to go into an area where it can be shorted, such as this fair value gap here. So there we go. We have, this is on a 4-hour fair value gap. So if I believe that this is going to be a liquidity grab below this swing low here, why not wait for price to come up here to get a nice entry to continue lower to take the liquidity? Why should I be chasing price to go lower? This needs to come on as an understanding, and we haven't even touched upon previous daily high and daily low. This is where price is in regards with what we've analyzed from a monthly level. Now let's see how does that look on the dollar index. We can press space, and here we are on the dollar index. Look what this story is telling me. We're very close to that round number of 103. So if I want to be shorting the dollar index, which means going long on the pound dollar, would it make sense to do it before it hits that level of 103? Big question. What can you also see on this chart was very evident on the 4 hour. We can see that now the price is hovering in this fair value gap here. Above that fair value gap, which this is another 4 hour fair value gap, we have that big round number of 103. So if I want to be short in the dollar index, it would make sense to wait to see if price is going to go to the 103, if price is also going to take liquidity above these buy side liquidity on the highs there. So now we have a bit of a picture on pound dollar that can go and take the highs before it continues lower. All right. Now, if I wanted to long the dollar index, where could I go long? It would make sense that 103 becomes a target that the price wants to go and take out. Now, very quickly to your left, even on the 4, and again, we haven't looked at the dailies, you can identify that this area here is a fair value gap on the 4 hour. So we have that area there on the 4 hour fair value gap, which is of interest. So we can wait for the price to come down before we can go up. Never chase price. That can give you a nice bias that if price now continues lower, this is going to create a bias situation for me to be long. If price pushes up into these levels, it's going to create bias for me to be short. So as you can see, there's opportunities to be long and short, and that's where being neutral is almost like a necessity when you're starting looking at the charts. You don't want to come in with your own bias of what you think the price is going to do. Price needs to lead you to what price wants to do. The information that you're receiving from these charts, that should be the only reason why you're doing whatever you're doing on the charts, and not what you believe price is going to be doing. As we can see, price can go up into that 103, but it can also go down to find that Fibonacci retracement on 102. Why? Yes, wait, see what it's going to do, and then react after that. So we jumped onto the 4 hour because I didn't want you to have any influence of where the price is to the previous daily high. So now let's jump onto the daily. And what we can do is do our normal setup where we put our previous daily high, and we're going to double tap on that like we've learned on the previous videos template, and I'm going to put daily high. I utilize that as red, and then I'm going to go back down to the low of that previous daily candle and change that to the previous daily low. Now what do we have? We have that the price is currently in the high side of that previous daily high. Took out the highs in the Asian market and the London market, and now it's starting to push down. That is of interest. We also need to put in the equilibrium, and then from my templates I'm going to find my equilibrium, and there we go. So we have the information from the previous daily high, previous daily low. Now we can take and see how that 4 hour chart is looking quite interesting, because we can see we've taken the highs out. Now price is pushing back down into that fair value gap. Equilibrium is sitting into that fair value gap. So that might be an interesting area where we can create a bias for a long opportunity for the dollar index. What does that mean for the pound dollar? If I'm trading the pound dollar, if I want the price of the dollar to come down, that means I'm looking for a long opportunity on the pound dollar. We're going to do the same on the pound dollar. We're going to grab the previous daily highs and the previous daily lows, command for the magnet, go to equilibrium, daily, that's daily low, and then we're going to add one more ray onto the previous daily high, and the only thing that's missing from here is our Fibonacci, which we're going to add that 50% and horizontal line onto the 50%, and now we can see where the price is responding to that. We took out the lows a lot lower than the previous daily lows, so there's a pushing upwards, and again we have that 4 hour fair value gap. So this would be an interesting area that the price can go and hunt and take down. Now, if I want to find for long opportunities on the pound dollar, then I go down to my good videos of the silver bullet, which you can find here, and the OTE, which you can find here. And there you go. Just like that, we started from historical data. Yes, we're day trading, but we want to understand what price means for each asset. Where are we? Is there interest for selling? Is there interest for buying? Why has the pound dollar gone to the 103 or very close to parity? This is where fundamentals can come in. I don't trade with fundamentals, but I want to know the fundamentals of price. Where is price? And where are we now? Where are we trading with it? And obviously, where is the Fibonacci retracements? I love Fibonacci retracement. I love Fibonacci levels. There you go. A combination of all that is going to give us a big understanding of how to create bias. And either way, if we're longing or shorting the price, or if we're even neutral, we need to be able to explain it to someone in detail of why we're doing that. If you can't explain it, that means you haven't got a good grasp of how to create bias. I hope this video has been helpful. If it has, write a thank you message below the video. Also write a Discord if you want to get the link for the Discord, and if you want to join the Vanguard where we have Q&As every week. Every week it's our second Q&A where we answer questions like, how can I become profitable? Why am I stuck? You can share screens and we can all give our feedback on it. So it's a great community and I'm really proud of it, and everyone in there is super helpful and they're keen to learn. As you know, we're going to be doing a giveaway when we hit 8,000 subscribers, and that's going to be a yearly Vanguard membership, which costs about $20 a month. So not a lot, but for someone that might be useful, and you can come in and see what we do at the Vanguard community. Drop a like, subscribe, and I'll see you next time.
I can't take no loss. I don't even know what it costs.